Hello, this is the ChartProfit webcast. We're over 3 hours into the trading day on Friday the 30th of October. As we're at the end of October, we're just showing the cycle here that was shown at the start of October, predicted down for the month. In the predicted cycle, it's pretty flat through to about the 10th, and then we get a bullish move to the end of the month. The actual Dow looked like this, pretty much up all the way. Predicted cycle for November is different. It's strong through to mid-month and then it kind of flattens out after that. This is from the pre-open today, looking at the E-mini S&P. And we've moved up to this higher range here above 2050 and on Wednesday in here, enough time printed at 2063 to migrate the 5-month point of control to that level. So this becomes an important level. It's now first level support, and probably more importantly up here at 2095, as I mentioned today, the point of control up there comes back into play as resistance. Said we were monitoring this level from May until the sell-off in August, so for many months that was the important level. It still is actually 12-month point of control, so that should be significant resistance. Price above that would be very strong price location for new highs for the E-mini. So here's those two levels on live chart. This is a 15-minute. Here's the resistance. So that's worked really well today, and this is the first level support down here at 2063. So price below this level would indicate more weakness in the short term. We've seen any dips being bought recently. We have some minor divergences. This is the market chart for New York, looking at the daily breadth indicator. So as price is pushing higher here, a net volume percent 10-day moving average is coming down from overbought levels up here. So currently in the short term, the breadth not confirming the higher prices we're seeing here. We're seeing it on this indicator as well. But as long as this indicator and this indicator stay above their levels, which are here and here, we are looking at a situation here where we call it supportive from the breadth, giving us this green band here, which we've seen from about this point. But if we're looking for negatives, minor short-term ones, this price oscillator from an elevated position has turned down. So we're losing a little price momentum up here, as well as breadth. See the equivalent level on the spider, 209.90 up here, this time resistance, and price here would probably see us higher to new highs. While we're talking about momentum, we're looking here at the small caps, and you can see, we've mentioned this many times, the divergence between performance of the large caps, the spider, the diamonds, and the Russell 2000. Currently printing very close to its point of control at 115.35. That, if you remember, fell slightly from 116 up here. So a little time here could lift that point of control back to that level. So there might be a little movement at that important level, but let's just say if we see price breaking out above the recent high on Wednesday, that was a good strong move from IWM this week. So if we see price sort of breaking out above the recent highs, this week's highs, that would be a positive. We'd clearly be above its point of control. Again, we have this minor divergence on the price oscillator, and as you know, what tends to happen is we see the price oscillator back to zero most times. So if we get close and we can hold support, that would be pretty positive signs. This will remain a key chart simply because we're printing so close to this point of control. And as you know, it's very interesting that the S&P has rallied back to its equivalent level, which is much higher. And we'll see where we go from there. If the S&P can't break above its point of control and we see the Russell back down here, that would be a weak indication. So we'll monitor all of this, obviously, going into next week. Another key chart is the UK FTSE 100. I believe this is probably the settled price down here. So we've closed down just under 1%, just over a little more than 1% for the week. But again, this halfway point is causing a problem. Just globally, I'd like to see some price action up here. And on the UK indices, the FTSE 100, the all-share mid 250, this natural resistance is a bit of a barrier currently, and we're turning down off that level. And this is the DAX, the German DAX, clear illustration here of why on the chart, support and resistance, I only use two levels. One is most important, the time support resistance. So 93.07 is the major. Obviously support on this chart, and we've seen it here and here, almost exact. And now from this high, the other level that I use is the halfway points, and we've come back to the halfway point. So on this chart, like the S&P, we've seen quite a fierce rally just over the last couple of weeks up to those important levels. So again, going into next week, looking at all these charts, you can see a plan developing. I mean, positive charts would be the FTSE above its halfway point, the DAX above its halfway point, the S&P above its major point of control, IWM above its major point of control. At current levels, until we see that, it's probably not worth chasing this current move. Looking at the supporting charts, I spent a lot of time looking at the various controlling prices for TLT on various time frames. There are lots of important levels around here, so we seem to be just ranging recently. 127.50 up here is an important value area high. We probed above it. We've retraced back with some oscillating. We're currently holding just above the 12-month time support at 121.40, and clearly this level here, which is the half range off this low. So I see bonds being, in a strong position in as much as it's being supported by these levels. As we're moving, we've been in this ranging situation for a few months. We've seen the price oscillator back at zero here, so if we see this turning back up from support, that would look pretty good. Time up around this level here we just discussed, 127.50, this value area high. Price acceptance around there might see the chart higher, but currently I'm finding a difficult chart to call, and obviously most participants in this market are as well. It's a question of most likely what are the Fed going to do and when are they going to do it. Price below 121.40 would likely see a test of 117.14, the major down here, and price down here would look pretty weak. As you know, I remain unimpressed with gold. This is GLD, the gold ETF. The halfway point off the July low comes in around 109 here. Price below this level would put gold, GLD back in a really weak position, and we'd likely see a retest of the low. That's my opinion. We're seeing price oscillator heading lower, and when we look at the commitments data from last week, the commercials are at zero on the sentiment index. You can see they're heading down here, their commitment, their net position, with the large speculators and the small traders heading higher. That's not usually a good scenario. Just look at the large speculators in the middle here. When they get quite enthusiastic over gold, you can see on the chart the blue line, their net position is breaking out to multi-month highs at these vertical red lines, where the chart tends to turn down in this downtrend. The current position for that is a little higher, so if we did see this, we'd probably see this. Either way, price for GLD back below its halfway point around 109 would be very weak price location. I couldn't look at the long side, as I've said before, until we see some time printed above 115. Just when we look at the Forex charts, this is copper futures. This big level up here is a major halfway point. So this is all in the longer time frame. Everything below this level is weak price location, and I'm just coming up off this low with this halfway point, and we're down here. So I'm thinking retest of this low here. If we see copper heading down and doing that, that will attract some media. Okay, recently we were looking at the potential for the dollar index to turn lower, especially when it did this, failed at the halfway point. We did see it lower. It's made a very good recovery. We were looking for a long-term possibility of a long-term change, and we've really seen some evidence that that is not happening. The dollar index has recovered here above the halfway point of this high, which is pretty good price action. And as long as it holds 96.50 roughly, it's in a strong price location. In the longer term, 95.22 down here is the 12-month time support. So as long as we're printing above that level, long-term strength, and as long as we're printing above that halfway point like we are right now, short-term strength. And that's quite a change over the last few days because price down here was in a very weak position. Technically, I did mention that anything below -50 on this stochastic momentum index is oversold. Lots of the technical oscillators were oversold. They're currently overbought. But at this point, we had a situation where it could have just marked time and printed some time below that level, and the oscillator might have worked its way off, and this would have been a really weak situation. So it's come back strongly, the dollar here. And we can see the reverse situation in the Euro FX chart. The important levels up here, these major this major area of what is now resistance, we've fallen back below that, and from this low to this high, and this is the halfway point. So we are currently here, like the dollar index is in short-term, long-term position of strength. This is a weak chart. The oscillators are oversold. This can of course mean absolutely nothing, as it did over here. And again, in the commitments page from the ebook sent out on Monday, you can see the small traders are pretty bullish with the commercials bearish. They're still net long, but they are less so recently. And if we look at the yen, you can see the small traders are pretty bullish here. In fact, more bullish than they've been in quite a long time. Okay, you're going to find that the video stalls a little at this point, so you might want to just wind forward a little at this point. So on the dollar yen chart, since that probe below the major point of control back in August, we've seen the rally back to that halfway point, and price above that level, which is close to 121, would put the chart back in a strong price location. Trying to find something useful to say about the pound dollar chart, but there's just so many levels of importance where we're currently printing, makes it very difficult to call. We are printing below the 156.30 15-year point of control, so weak price location. This is the Aussie dollar chart, price location below spot 76, which is the major time resistance, and that means for me long-term weak price location. Sentiment indicators follow the Ridex, or my version of the Ridex assets ratio, each day pre-open, and from this low here just above 3, as the market's headed higher this month, we've seen the ratio up to around 6, which historically back a long way was extremely high, but of course we've seen much higher ratios over the last few months, which make this move here seem less significant than it would have been back before the start of this year. If we break down the funds that I follow into bull and bear funds, we saw a 3-year high around here for the bear fund assets. The Ridex retail traders getting extremely bearish at that point. But as the markets rallied, this has come off pretty quickly. So the assets have fallen quite sharply on this part of the rally here just recently. And probably even more strikingly is the inflow in the bull fund assets this week, up 35% this week. So late last year we hit a new peak up here, and the market tumbled in August, and we hit an extreme low level, and now we're rallying back, and these are coming back really quickly. And also down 35% this week, the money market assets in the Ridex money market assets retail fund, down really quickly. Obviously money coming out of these funds going into the bull funds at quite a rate. And if we look at the poll public poll from AAII. Bulls percent was higher this week at 40.4%. That's the highest since February. And bears percent fell to the lowest level since February at 20.6. And the 4-week moving average, that's the black line of the net bulls minus bears, that's at 11.73. That's the highest since March. That's that level there. Over here, this was an extreme low for the assets. Beg your pardon, for the poll over here. Let's redraw that. But again, as the market's rallying, has rallied this month, we're seeing bullish sentiment coming back in here pretty swiftly. Seeing something similar in the exposure index, which is a measurement of current equity exposure of active money managers. I've noted that anything below 30% over the last few years usually brings in lows, and so we're seeing this rally here, but pretty quickly the number is coming higher. We're 56.71 this week. That's the highest since June. Not a useful number, it's just the way the markets come back, or the way the numbers come back pretty quickly. Just found with this indicator it's these numbers below 30 which are most important and useful. And if we look at the Lipper US fund flows this week, they reported equity fund included ETF inflows of $8.4 billion in the week to the 28th of October. That's quite a high single week's inflow, and I believe the 4-week flow is also at 8.4 billion. Yeah, here. So we're heading higher. This 4-week flow here reached a real extreme down here in late August. That was the lowest since February 2008, but we are climbing with the market currently back in net positive territory now. And just also note here, we're looking at the VIX today, for the last few days back below 15, having been well above 50 at this point in the panic. Okay, that concludes today's video. Once again, I wish you a good weekend and thank you for watching.